From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 23rd, 2017. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. We have two different trends that we really want to focus in on here today. That's the blue trend line falling from the three highs now along that blue trend line, and the black trend line, of course, the most recent rise or uptrend that the New Zealand dollar has been in. If I zoom out one more time here on the daily time frame, you can see the significance of the blue trend line. We were at the very top of a long-term uptrend, and it's been falling along that blue trend line for the past several months, going all the way back into 2016 here at the top of the chart. So it's been falling from there. 1, 2, 3, and you can really probably throw this little high in there as well. So very significant pattern along that blue trend line. Zoom it back in now, and now you can begin to get a handle of how significant that fall is and how significant the three falling highs are. So that's very important as we go into the 0.7300 level, that resistance along that trend line. Now, of course, like I said, we know that we have been in an uptrend along the black trend line. So what we're going to look for as it approaches this blue trend line, as it approaches the 7300 level, is indications and signs that there are sellers that are going to fight back. There's price action that tells us there are sellers present in this area. If we zoom it in one more time, you can see the last couple of times challenging here into the orange shaded area, 73, we saw significant turnarounds. From one time, turned right back around, went down to the green zone. Second time, turned right back around, went down to the green zone. And here we are the third time coming back up here into the orange shaded area. So it's a significant decision point. Top of the trend. Well, first off, you repeat to yourself that motto, buy low, sell high. If you're going to buy something, even in an uptrend, you don't really want to buy it at the top of the uptrend. It doesn't provide low risk and high potential reward because you're at the very top of the trend. In the last couple of times we challenged 73 and the blue trend line in the orange shaded area, it bounced off of it and went back down. So buying right now just doesn't seem like a logical intraday trading decision. Now, what do we do with that? If we're not buying it, there's potential for resistance and reversal, just like it was here, just like it was here. So we're going to watch for indications of resistance and reversal. Reversal takes it back down at minimum to the green shaded area, just like what we saw the last two times. And of course, breaking the black trend line in the green shaded area, we'd look for it to go lower. All in all, the risk in that scenario is that it breaks above the orange shaded area. So even if you're thinking about buying the uptrend, which is a fine thing to do if the timing was right, I think you would prefer to do it at the green shaded area or above 7,300 and the orange shaded area. So if you're considering buying and going long, that's above the orange zone or back of the green zone. Right now, not a great place to go long. And if it's not a great place to go long, maybe we have that intraday opportunity to look for a short scenario here for the New Zealand dollar. We have a couple of fibs drawn on the chart. I guess the one that's going to fit with us the most is the 618 of a longer trend range is sitting at the green zone, 886 of a shorter trend range sitting at the 7311 level just above the orange shaded area. 4-hour time frame doesn't really change it a whole lot. It just gives us a little bit of a zoomed in view here of what's been happening. I want to take two other trend lines. Let's take this red well, let's draw it as black, but I'm going to change it over to a different color so it's easy to see. Let's put this red trend line here showing rising lows, but we also put this one here showing we have falling highs. So again, we have an indication of a consolidation or contraction pattern where the highs are getting lower, the lows are getting higher. We're in this decision zone. So even if you look at the triangle, it's matching right up there with that orange shaded area. Falling highs, rising lows, triangle pattern developing here at the top of the uptrend. One of two things is going to happen. It's either going to break the orange zone, the blue trend line from the long-term daily outlook, 7,300, the red trend line of the triangle, it's going to break above it and go higher, or it's going to break below the green zone, black trend line, and we're going to see reversal to go down. So we want to see some indication that there are sellers here and going to drive it back down. The risk is pretty low. Your stop loss is above the orange shaded area, probably above this last high over here if you really want to get technical about it, and you're going to look to target the green zone or lower. And the risk, like I said, is a break above 73. We look for this to continue pressuring higher for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.